In our last video, Matthew Sainsbury's co-manager of Close Managed Income gave us his thoughts on equity income as the place to be for 2022. But what did our other managers have to say about it? This video offers other areas of the market that have the potential to perform well in an uncertain environment. Already in this series, we've discussed both inflation and the possibility of central bank mistakes. Typically, we'd highlight areas like gold and silver, but Chris Bowie, manager of 24 Corporate Bond, disagrees.
My own feeling is probably away from things like precious metals towards perhaps equities or maybe property, something that can benefit or at least hold its value from both growth and inflation. And therefore, I think real assets rather than nominal assets away from fixed income would probably be the best hedge.
Jean Mali, economist at JP Morgan, believes that equity markets can still remain resilient, but is also considered rotations in the market for next year.
Thinking more about how in 2020, some of the more defensive or tech-like names or stay-at-home stocks did quite well. And so I would want to maintain some exposure to them. But I would also want to add in some diversification into my portfolio. I'm not going fully sort of all in equities, but fixed income does look quite challenging. Perhaps looking at some alternative asset classes, things like macro hedge funds to provide that diversification, or real assets, things like property, could help against that inflation protection.
Jason Pidcock, manager of Jupiter Asian Income, also highlighted the importance of property.
I think countries where there is less environmental risk to property and where there are relatively low political risks to property rights, such as the UK, I think property that is less vulnerable to environmental impacts, i.e., for example, houses that are high above sea level or areas of land that is arable or woodland, I think that kind of property will not just hold its value, but continue to appreciate in price as there are more global buyers who seek to own that type of a bolt hole as they think more and more about the risks or the necessity to migrate in future if there are environmental shocks.
For Chris St. John, manager of AXA Framington UK Mid-Cap Fund, it's less about specific areas of the market and more about finding good companies.
I think my suggestion really would be to focus on those asset classes where active stock picking adds value. If you're looking outside of the UK, I'd focus on those smaller company areas where company research is less extensive and available. And really, a lot of the things that we're seeing, the thematics around the strong getting stronger, i.e. companies that are producing producing information rather than data and are helping the digitization of businesses and governments. I think all those thematics are alive and well in many markets, and I would urge people to look outside of the mega caps when looking to invest in some of these thematics.
An area of general consensus was fixed income isn't particularly well placed for 2022. Unless you ask Nomura Global Dynamic Bond Manager Dickie Hodgins.
I'm actually quite positive for strategic bonds, and generically I'm quite positive for the bond markets. We are looking to forecast returns of between 6 and 8%. This is made up typically of around about 5% from an income distribution perspective, and then we're looking to, at the minimum, generate a 3% positive return as prices rise. And the reason for this is because we don't believe that interest rates that will go up by the Federal Reserve as much as the market will ultimately discount. But the profile of this is going to be quite tricky.
In our next video, we'll feature 5 equity managers sharing their views for the year ahead. Remember to like and subscribe to be notified when the next video is published, and to learn more about any of the funds mentioned in today's video or to get more Outlook content, visit our website fundcaliber.com, where we have more articles, podcasts, and videos on all the subjects.